Interrupt you as the governor's here.
This post-policy conference, press conference. As always, we have a respected governor here, and along with him are Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J. And also with us today are Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan. With this, I welcome all of you to the RBI's press conference. And before going ahead with the press conference, I'll request the Governor to make a few opening remarks. Sir.
Thank you. As I have done on previous occasions, I would like to summarize whatever I have said in my statement. And I have 9 points very quickly. First, domestic economic activity continues to be resilient. India is poised to become the new growth engine of the world. Second, declining core inflation is a silver line, but headline CPI inflation remains vulnerable to recurring and overlapping shocks. Especially remains, let me rephrase it, declining core inflation is a silver line, but headline CPI inflation remains vulnerable to recurring and overlapping food price shocks. Third, the MPC remains highly alert and will not hesitate to take timely and appropriate action if situation warrants. Four, it's emphatically reiterated that the inflation target is 4% and not 2 to 6%. Hence, monetary policy needs to remain actively disinflationary at the current juncture. 5. Liquidity will be actively managed consistent with the monetary policy stance. OMO sales will be undertaken as necessary. 6. Banks with surplus funds are encouraged to lend in the interbank call market for better returns instead of passively parking them in the SDF. 7. The financial sector balance sheet remains robust. While the Reserve Bank is closely monitoring the emerging trends in banks and NBFCs, the financial sector balance sheet remains robust. While the Reserve Bank is closely monitoring the emerging trends, banks and NBFCs are expected to strengthen their internal surveillance mechanisms and institute suitable safeguards wherever necessary. 8. Financial stability is fundamental to price stability and growth. That is the core principle which we follow. 9. The external sector is eminently manageable. Thank you.
Thank you, sir, for those opening remarks. I'll begin the press conference by inviting Mr. Anup Roy from Bloomberg to ask his question.
Thank you, sir. Sir, this is regarding the OMO announcement that you did. So will there be a calendar for OMO, and is this in preparation for the JPM bond index inclusion?
As I have said in my statement that first thing I would like to say that it has nothing to do with the bond index inclusion. And let me reiterate that it has nothing to do with bond index inclusion. It's a part of our domestic liquidity management. With regard to calendar, I have said that we will watch the evolving trends. There are several moving parts in the whole liquidity scenario. We will watch the evolving trends and we will notify as and when it becomes necessary.
Thank you, sir.
So we do not at the moment propose to give a calendar.
Thank you, sir. I'll move on to Mr. Manojit Saha from Business Standard.
Good afternoon, sir. You have said that the transmission is still not complete, while saying that the stance is withdrawal of accommodation that is maintained. So do you expect banks, so does RBI expect banks to further adjust their rates so that transmission is complete? And are you worried that a change to a neutral stance will dilute your resolve, will signal a dilution of your resolve to act on inflation?
You see, a change of stance to neutral will be on table when the situation becomes so. At the moment, the monetary policy, the rate hike is still incomplete. I have given the numbers in my statement. We have increased the repo rate by 50 basis points, but it has not fully translated to either the deposit rates or the lending rates of the bank. There is still some distance to be covered. So we would expect that to, align with the increase in the repo rate. And so therefore, at the moment, the stance remains withdrawal of accommodation.
Why OMO sales when liquidity is already in deficit? You expect the deficit, you have a figure in mind what kind of deficit you want to?
Okay, I would request everyone to just stick to one question. So, you see, liquidity is not in deficit. The liquidity over the last 2 or 3 weeks went into a deficit mode mainly because of advance tax payments and GST payments. So therefore, what was a part of liquidity went as payments for GST and payments of advance tax last month in September. Advance tax was in the middle of September and GST was around 20th of September. So therefore, for those 2-3 weeks, the liquidity became very tight. But overall, if you see, the liquidity is surplus. We have announced withdrawal of 2,000 rupee notes. And 2,000 rupee notes, we have so far got back about 3,43,000 crores. And only about 12,000 crores or so are left. And so 3,43,000 crores we have got back, of which of course 87% has come as bank deposits. The rest is, exchange of cash to other denominations across the counter. So there is a substantial amount of therefore liquidity which has built up because of withdrawal of rupees 2,000 notes. Government spending is also now picking up. The taxes came around 15th, 20th of last month. Government spending has picked up and will pick up. So therefore, that will also add a lot of liquidity in the system. And I have also said that in the festival season, the demand for currency will go up. So currency in circulation will go up. So that will sort of drain out some amount of liquidity. But overall, if you look at it, the liquidity liquidity is in surplus. So we have to be very watchful. That's why I have said we have to be active. There will be active liquidity management. We will be very watchful. The whole liquidity matrix has several moving parts. We will remain watchful, and we will undertake whatever operations are required from time to time. OMO sales is one which we thought would be required. So therefore, we have made a mention about it in my statement. Thank you.
Thank you, sir. I'll request everyone to stick to one question. Maybe we can come back for a second question. So I'll move on to Ms. Lata Venkatesh from CNBC-TV18.
Is it okay? Okay, thanks. Sir, I have to stick to OMO again. When you say OMO intervention, as you say, you have not given us an idea whether you will do an OMO auction or what you have been doing all these days, some quiet screen-based buying. And what is the purpose? Is it that you want to react to the global yields and therefore, some kind of a bulwark? What is your trigger? Has it got anything to do with the way global yields are, 1 full percentage point higher? And more generally, as a EM central banker, what are your fears and what are your tools when you see such a rise in yields?
First point is that this will be done through an auction process and not through the NDS home platform. This will be an auction process. We will notify it and then we will undertake the auction. We will undertake the operation. That is the first part. And with regard to global bond yields, our liquidity management, what I have announced, has again, let me reiterate, has nothing to do with the global bond yields. if you see the statement carefully, what we have said is that our liquidity management will be consistent with our monetary policy stance. So it will be consistent with the domestic, the monetary policy stance in the context of the overall liquidity situation. So it has got nothing to do with the bond yields going up in the advanced economies. And what was the other part you asked?
General observation, when, it is the international currency, reserve currency for now, and when yields go up there, as a EM central banker, what are your fears? What are your tools?
No, you see, our bond yields, domestic bond yields are reacting to domestic factors. Our domestic bond yields are not really reacting to international factors like the bond yields going up in some advanced economies. Our bond yields are determined primarily by domestic factors as it stands today. The bond yields going up elsewhere, especially in the United States, do normally lead to currency depreciation in the emerging market economies. But the difference in the context of India is that our forex reserves are sizable, very comfortable. So that gives a lot of confidence to the market. And secondly, we do intervene in the market to maintain stability of the currency and to prevent excessive volatility. So primarily, if I can put it differently, we use one bird to kill one. We use one stone to kill one bird. Of course, to kill a bird is not the right thing to say in the context of, the safety of animals, but this is a manner of speaking. So I'm not saying that we'll go and kill a bird. So please don't take it other way, especially the animal lovers and the bird lovers among you. But on a serious note, we use one instrument for one target, for one objective. When you use an instrument, it may have some collateral impact elsewhere. So that is how it stands. So basically, we will use one stone to kill one bird. Sorry?
Remittances are falling. 1 billion a quarter, they are falling.
Remittances are remaining quite robust. Remittances are remaining quite robust and quite steady. Temporarily it may happen, but our data shows that they are holding quite comparable to last year. Would you like to supplement?
Balance of payments for the first quarter shows very strong remittances. In fact, this year might be higher than the year gone by.
I think, Lata, will move on from here. We'll come back to you later on. Let's now go to Swati Bhatt-Shete from Thomson Reuters.
Thank you, sir. I'm going to stick to the liquidity theme, sir. So do you think there's a need for the RBI to rework the liquidity framework? I mean, under the existing framework, the 14-day VRR and VRRR is the primary option. There isn't active participation seen or as much adequate participation as RBI would like. Now that that's happening, you've had to use innovative tools like ICRR. And now that liquidity is going to remain the key theme, and under the current framework, the call rate needs to be aligned with the repo rate. And you yourself said in today's statement that it's more towards the MSF. Is there a need to rethink this framework, and are you going to actively pursue anything to bring the call rates and overnight money market rates back to the repo rate? Thank you.
I think I would request DG Michael Patra to reply to that.
I think the liquidity management framework is robust. The ICRR was not a reaction to low subscriptions in the regular auctions. It was an instrument intended to deal with a specific occurrence, that is the 2,000 rupee notes. The regular operations are essentially intended to enable banks to maintain their reserve requirement cycles.
Getting the overnight rates back to repo, is that something that you're going to actively pursue? Because that's, as per the current framework, that's required, right? I mean, it needs to be anchored to the repo, and
yes.
We are already close to MSF.
Yes.
Or you've done an effective rate hike.
No,
so
if you see on a daily basis, the call money rate is around 6.75. But if you average it for the month, it's 6.56, which is at the repo.
So, thank you, sirs. I'll move on to Mr. Govardhan Rangan from Economic Times to ask his question.
Thank you. So good afternoon, Governor. You actually manage liquidity as and when required. You intervene in the currency markets as well. And now you spoke about the OMO as well, right? So it's a kind of active management of many moving parts. So now, since your announcement of OMO, and the financial conditions are not as tight as it is in the rest of the world. If one looks at the a 10-year yield gap between the US 10-year and it used to be 500 basis points on average, but now it's some 220, 225. Is it a kind of a RBI facing kind of an impossible trinity kind of a situation now, in the sense to trying to manage all the three, your monetary policy, exchange rate, and flows, everything? Thank you.
No, I think as I just replied, we use one instrument for one objective, one stone for one bird. There may be some, fallouts, there may be some collateral effect elsewhere, but primarily we use one instrument for one objective. Liquidity, whatever we are doing, it is because of the domestic liquidity situation. Foreign exchange, the forex, the pressure on the exchange rate because of, let's say the dollar index going up, etc. That is managed through, because we have, as I said, we have reserves, enough reserves, and that is managed through market intervention to prevent volatility. So that is how it stands. I don't know, have I answered your question, or is there something else you...
So in terms of the tightness of the financial conditions, so there is a kind of a difference that used to be there in terms of the advanced markets and the emerging market, and especially India. Now that has really narrowed quite a bit. Is that probably a reason for you to really think of OMO as well now at this point of time, to really tighten the financial conditions and push up the yield rather than just manage the liquidity?
No, it is not a yield management, the OMO now which we have announced, it's not a yield control or a yield management instrument. It's entirely to manage liquidity. Would you like to say something? Huh?
Thank you, sir. I'll move on to Roisuke Hanada-san from Nikkei Asia.
Just,
Sorry. Good afternoon. Actually, last month, G20 summit decided to welcome the African Union as a permanent member of G20. Then my question is that what do you think of the impact of this decision on the global framework or the discussion, especially regarding the international discussion of the financial sector? Thank you.
I think the inclusion of the African Union in G20 is a very welcome development. It goes in line with India's objective of placing the voice of global South on the global table. G20 is a multilateral forum, and you cannot have a situation where a whole continent is left out of it, excepting South Africa, which is at the southernmost tip of the African continent. So to that extent, I think inclusion of African Union is a very welcome development. And now the financial sector issues and other factors relating to Africa will be discussed in G20. Africa now gets a voice in the G20 forum to express the situation in Africa, in various African countries, and to express their priorities and their expectations from a multilateral forum like the G20. This very much in line with, not only India's priority, but also I think it's the international priority to have to listen to the voice of a large continent like Africa.
Thank you, sir. I'll move on to Mr. Ankur Mishra from ET Now.
Thank you, Yogesh, sir. Good afternoon, Governor. You have raised red flags about the personal loans, some of the pockets of personal loans, but it is only a warning and no action. Is there any action also which is planned, meaning in terms of regulations? Is there something which RBI is thinking, and where is the problem? Is it more of fintechs, or it is even there in banks and NBFCs as well?
You see, I have said in my statement that the balance sheet of the financial sector, especially the banks and the NBFCs, they continue to be robust. All parameters, you look at any parameter with regard to banking, with regard to NBFCs, they are better. In fact, the GNPA figures of the banking sector, the unaudited figures which we have now got for end of June, looks even better. NBFC also are experiencing a similar situation. Our objective of saying like this, saying what we have said, is that, and this I have said earlier also, that we have to be mindful of what can going forward pose a challenge, what can become a future risk. So in certain segments of retail credit, we saw high credit growth. So it is only to caution the banks to strengthen their internal surveillance systems, to watch the trends and take whatever measures are required. And so far as the Reserve Bank is concerned, the Reserve Bank Supervision Department monitors it very intensively. But the first line of defense is the bank, and the NBFCs themselves. So it is to sensitize them about the credit growth which is happening and not lull them into any kind of complacency. This is in line with what I have been saying over the past few months.
Thank you, sir. I'll move on to Mr. Ben Jose from PTI.
So this is again on the personal loans that which you have flagged. You said if you look at the messages that you get, SMSs, so the marketing messages that we get is mostly from the private sector banks and NBFCs. Your worry is about the banking system as a whole or the private sector and the NBFCs?
So we are the regulator for the entire banking system. So whatever we say is for the entire banking system, which includes public sector, private sector banks. It includes the small finance banks also. It includes various categories of NBFCs, the upper layer, the middle layer and the base layer. So it's for everyone. We don't differentiate, between our messaging among which sector the banks belong to. Wherever individual bank related issues are involved, I'm explaining the normal practice. Wherever individual bank related issues are concerned, our supervisors normally engage with them directly.
The problem is more among the private sector banks. Internally, what is the rationale for the warning? So public warning during the policy?
No, as I said, it is not because we are seeing that some problem is already there. We are only sensitizing them that you have to be careful. You have to be careful. You have to just keep your eyes and ears open, and nose also open. You have to smell where the crisis is likely to come up. At the moment, the banking and the NBFC sector are stable. Is there anything you would like to add?
Just to supplement on that, essentially, if you look at the last couple of years, the year-on-year growth on the retail credit has been close to 30% in most institutions. On an average basis, the unsecured retail credit has grown at 23%. If you see that in the context of rest of the credit growth, which is anywhere from 12 to 14%, it looks to be an outlier. So as a supervisor, it is our intention to inform the banks that this is an outlier level of growth. So strengthen your internal surveillance mechanisms so that any risk that may likely be building up is handled upfront, rather than coming to grief at a later time. And also because of the ability to lend through digital modes, this particular segment is showing a far greater growth compared to others. So we are mindful of that in terms of the opportunity and the ability to the ease and convenience that have been brought through the digital mediums. And if there are, as Governor said, when we see any outliers, they are reached out separately. This is a general system level advisory so that the banks and NBFCs and all the players strengthen their internal measures, put internal prudential framework, have their risk appetite framework and grow their portfolio sensibly. So that's the intention at this point in time.
No need for provisions or risk weights.
We have not announced any regulatory measures or macroprudential measures at this point in time. We would expect as a first line of defense the banks and NBFCs and the fintechs to take appropriate internal controls. In case if we don't see internal controls playing out, then we will examine. But at this point in time, it's only an advisory.
Thank you. I'll move on to Mr. Jeevan Bhavsar from All India Radio.
नमस्कार सर, विभिन्न अनियमितताओं के कारण
लाउडली बोलिए।
विभिन्न अनियमितताओं के कारण रिजर्व बैंक कुछ बैंकों के लाइसेंस रद्द कर देती है। उस वजह से बैंक के जो ग्राहक होते हैं उनमें एक अफरा तफरी मच जाती है। हालांकि बहुत सारे केसेस में हमने देखा है कि 95% से ज्यादा जो अकाउंट होल्डर्स है उनको उनका पूरा पैसा DICGC की तरफ से वापस मिल जाता है। लेकिन ये जो अचानक से जो लाइसेंस कैंसिल कर देना है, एक अफरा तफरी या एक डर का माहौल उनमें तैयार होता है। तो क्या हमारे पास ऐसा कोई सिस्टम है या कोई सिस्टम हम प्रपोज करेंगे कि जिससे हम इन अनियमितताओं के बारे में बैंक के ग्राहकों को पूर्व सूचना दें?
I think DG Rajeshwar Rao can take that question.
ये एक अचानक फैसला नहीं होता है, जैसे कि हमने बोला है, कैंसिलेशन ऑफ UCB लाइसेंस इज नॉट ए सडन इवेंट. Banks are kept under if they fail to meet certain prudential thresholds, financial thresholds, they are placed under a supervisory action framework for corrective action. If that doesn't fail, they are placed under an all-inclusive direction, and the bank is monitored closely to ensure that they are able to come out of the financial problems that they are facing. It's only when these measures do not take place that a decision is taken to cancel the license. So it is not an event, and there is sufficient time given in this entire process for the banks to rehabilitate themselves through various measures.
लेकिन सर ये था कि अब जो कॉमन अकाउंट होल्डर है उनको ये सब चीजें सबसे लास्ट में पता चलती है जब RBI लाइसेंस कैंसिल करता है। तो अगर हमारे पास ऐसा कोई सिस्टम है या कुछ प्रपोज है कि हम जो कॉमन अकाउंट होल्डर है उनको कुछ अलर्ट भेजें?
जब बैंक को हम ऑल इंक्लूसिव डायरेक्शन वगैरह में डालते हैं तो प्रेस नोट तो इशू होता है, तो उनको उससे तो चेतावनी जो जरूरी है वो मिल जाती है.
Thank you, sir. I'll move on to Mr. Laltendu Mishra from The Hindu.
Thank you, Yogesh sir. Good afternoon, Governor. Sir, you have said the government is stepping up spending and is also likely to step up further. And in the last 2-3 years also, government is spending heavily, that is supporting the growth. I would like to know the state of the financial health of the government. As a banker to the government, are you satisfied? Are you comfortable? Thank you, sir.
The government has, I mean, first thing is it's not for me to really comment on that, but since you have asked as our perception as a banker to the government, let me say that the government has a fiscal consolidation path which they have announced in the budget. There was fiscal expansion because of the COVID time requirement, but the overall expansion that India did under the fiscal was very cautious, was very calibrated. Cautious is not the right word, but it was very calibrated and targeted. After the pandemic, the government has announced a fiscal consolidation roadmap, and by and large they are sticking to that. Even recently also, so far as the current year fiscal deficit is concerned, statement has been made by the finance ministry that government will stick to the fiscal deficit, and they are targeting this fiscal consolidation roadmap. So far as central government finances are concerned, I don't see any major problem or anything that worries the central bank.
Thank you, sir. I'll move on to Z Business, Ms. Swati Khandilwa.
थैंक यू योगेश, थैंक यू गवर्नर. मेरा सवाल सर, आपने जो रिसेंटली एक कमेंट दिया था अबाउट कॉर्पोरेट गवर्नेंस, जो बैंक्स में गैप्स दिख रहे हैं, उसके पॉइंट ऑफ व्यू से जब बैंक्स को ये कहा गया, आपने उसमें कुछ इम्प्रूवमेंट देखा है? क्या मेजर्स आप कुछ स्पेसिफिक ले रहे हैं उनके खिलाफ जो फॉलो नहीं कर रहे हैं, उस पर क्या व्यू बना है सर अब तक?
देखिए, कोई भी संस्था में किसी वक्त उसमें इम्प्रूवमेंट के लिए स्कोप रहता है, और हमारे जो बैंक है, वैसे मैं आपको कहने के लिए चाहता हूं कि पिछले कई सालों में जब एसेट क्वालिटी रिव्यू शुरू हुआ, फिर उसके बाद कई सारे स्टेप्स हमने लिए हैं. बैंक गवर्नेंस गाइडलाइंस हमने इशू किया 2021 में, गवर्नेंस गाइडलाइंस हमने इशू किया है, और एनबीएफसी सेक्टर के लिए न्यू रेगुलेटरी फ्रेमवर्क भी इशू किया है, माइक्रो फाइनेंस सेक्टर के लिए न्यू रेगुलेटरी फ्रेमवर्क भी इशू किया है. उनमें ये जो इंस्टीट्यूशंस है, बैंकों में जो अवेयरनेस है अबाउट द इम्पोर्टेंस ऑफ रिस्क मैनेजमेंट, गवर्नेंस एटसेट्रा, वो काफ़ी बढ़ गया है. अभी आई कैन टेल यू दैट द बैंक्स आर फार मोर सेंसिटिव with regard to risk management and with regard to other areas which form part of governance, namely risk management, compliance, and even internal audit. And so therefore काफी सुधार उसमें आया है, और आगे भी जाके सुधार का मतलब आगे भी जाके उसको फाइन ट्यून करना है, इम्प्रूव करना है. जहां हम कुछ डेफिशिएंसीज देखते हैं उसको हम रिजर्व बैंक और इंस्टीट्यूशन के बीच थ्रू सुपरवाइजर्स हम उनको पॉइंट आउट करते हैं कि ये जो है आपका एरिया, इसमें इम्प्रूवमेंट की जरूरत है, आप इसमें कुछ इम्प्रूव करिए. सो बट अदरवाइज आई थिंक ओवरऑल द गवर्नेंस स्टैंडर्ड्स, the consisting of what I've said, that key risk management, the compliance culture, the internal audit, and the sensitivity to maintain a robust balance sheet, that has definitely improved. But you have to improve further. I mean, that applies to everyone in every situation.
Okay, thank you, sir.
So we'll move on to Mr. Anand Adhikari from Business Today now.
Good afternoon, sir. Sir, I was looking at some of the external, data points since the August last policy. So now, if you look at the 10-year US yield, is almost, 20-25% up. I mean, almost 100 basis points, like Lata said. US dollar index, if I say how the dollar is strengthening, is almost 6-7% up since the August, policy. Crude, we all have seen the high volatility, though yesterday I think it was down. Now, if I look at the impact in the Indian parameters like Rupee, I have seen depreciated around 50 paisa, since the last August policy. Forex reserves are down 13 to 14 billion, again, since the last August policy. And FI outflow we have seen in the month of September and October. Now, in the context of liquidity, you said that it's a turning pitch and you want to play your sorts very carefully. How would you describe this external side? Or maybe in cricketing parlance, if I say.
I think you can take that question.
So, as Governor mentioned, we have very strong buffers in the form of foreign exchange reserves, which insulate our economy from global spillovers that you mentioned. As you can see, our bond markets react to local specific phenomenon in India and seem to be reasonably insulated from the yields in the advanced economies. If you look at our external indicators, the current account deficit is extremely modest, 1%. And
April to June.
April to June. Also, if you see the last year, the whole of the last year gone by, it is within 2%. The fact is that the whole current account deficit is more than comfortably financed, and that's why we build reserves. If you see the movements in the reserves, they are more or less due to valuation changes rather than a durable decline. If you knock out the valuation changes, as we do in the balance of payments, you will see there is an increase of 24 billion in a quarter. You look at the BOP, the balance of payments change, there you can see the improvement.
Thank you.
In fact, it's there in my statement also that on a BOP basis, the net accretion to our reserves is 24.4 billion US dollars.
It is the April to June or April?
Thank you, sirs. I'll move on to Mr. Sachin Kumar from Financial Express. Please ask your question.
Good afternoon, sir. You mentioned about skewed liquidity situation where some banks are parking, some banks are borrowing. So do you see a need of taking some steps to bring more uniformity in banks' response?
No, we don't like to do, unnecessarily we would not like to do micromanagement. It is for the banks to assess their own liquidity requirement and manage their liquidity in the most efficient manner possible. So we have observed this and just sensitize the banks. We would not like to get into that kind of micromanagement of liquidity in individual banks. But some conclusion we reached, and we have now told it to, we have voiced our view to the banks. Now it is for the banks to take a cue and act upon that. And I do expect the banks will take the signal and act appropriately.
Some banks are asking for extension of call market hours exactly for this, to extend it till 5:30.
We'll come to that. We'll come to that.
So you can probably take that question, on this NEFT and all. We'll come to that. Yeah.
Thank you, sir. We will move on to Gopika from the main.
Thank you, sir. Just one extension to his question. Do you see, are there fewer banks which are parking funds under STF? Is there a monopoly there? And is there a need for looking at a general policy because of fewer banks now parking funds under STF? I mean, that is a question largely in the market. And the second is, recently we saw a fintech slice has been merged with a small finance bank. Is Reserve Bank's outlook on giving a banking license to fintechs now, has it undergone a change?
Okay, on the fintech and the license part, I would request DG Rajeshwar Rao to reply. But there is no monopoly that it is only one or two banks who are doing, I have the details. I think this is today's position. Is it today or when is it? The today's position is that the MSF is a marginal standing facility where the banks have, all banks put together have borrowed 80,000 crores, 80. And in the SDF, the deposit is 56,000 crores. It is spread across banks. Maybe yes, there are a few banks which naturally, it's again linked to their size. The size of the bank also matters. A large bank will obviously have a larger, will have a greater share in both these numbers. With regard to the fintech, that small finance bank issue, DG Rajeshwar Rao can reply.
Yeah. First of all, I think what is envisaged, it's not yet a merger which has been approved. We have given a no objection for a proposal by one of the NBFCs to merge with the Northeast Finance Bank. That is a long-drawn process which happens under the edges of the NCLT. So it is going to be so we are given a NOC. And yes, we have not really taken any change in our approach as far as the fintechs are concerned. As far as approval for banking license or a proposal for voluntary amalgamation, we do carry out a fit and proper assessment of the thing, the financials involved, and the future setup of the bank or the merged entities, and take a call accordingly. So there has been no change in the approach.
Thank you, sir. I'll move on to Mr. Hitesh Vyas from Indian Express.
Hi, sir. Good afternoon. Sir, you have extended timeline to deposit or exchange 2,000 rupees note till October 7th. Do you expect the balance 4%, the entire 4% or 14,000 crore to come back to the system by tomorrow?
No, thereafter it can be, deposited in the, or exchanged in the Reserve Bank. In the, in the, what you call in the issue offices of the Reserve Bank, which is there in almost every state capital we have presence. So there are 19 of them. So it can be exchanged or deposited in the Reserve Bank issue offices. There is also the facility of sending these, these 2,000 notes through the postal department to the Reserve Bank, because supposing you are away from the state headquarters and you cannot travel, you can send it. So the facility continues with the Reserve Bank. Bulk of it, as you have seen, has come back. So it has largely met our original objective of, withdrawal of 2,000 rupee notes. The process now is with the banks till tomorrow, and then thereafter with the issue offices. You want to add anything?
So, a large part has already been received, as you yourself have said. Some portions will be stuck in legal cases or with enforcement agencies and so on. So that will take its own course. So while, to the extent that a large part has already been done, and as Governor said, as we have given, time even after 7th of October for withdrawal through the RBI issue offices, we expect that most of it will in any case be withdrawn, when the process is complete.
Thank you.
Thank you, sirs. I'll move on to Mr. Vishwanath Nair from BQ Prime.
Good afternoon, Governor. Two-parter again, I'm sorry, but one thing on the rupee. It seems that the RBI is very keen on defending it every time it reaches that record low. I don't understand, because it's a global issue. There's the global conditions have changed, and that's probably why your rupee is weakening against the dollar. But then I don't quite understand why the RBI keeps defending that record low. The other part is on the household finance savings numbers that came out. FY23 has seen about a 50-year low on that number. Considering your comments on retail loans, are you seeing excessive leverage building up within the household sector?
With regard to the household savings, there are several nuances. I would request DG Michael Patra to take that question. With regard to the other part of your question, you said the rupee. No, we don't have. Let me reiterate what we have been saying. We don't have any specific level of the exchange rate. Our objective and market intervention is to prevent excessive volatility and to see that there is orderly appreciation or orderly depreciation. We don't have any specific level. It's not a question of defending a particular level of rupee, nothing like that. So that policy of the Reserve Bank is a time-tested, established policy which we are adhering to. You can take the other part of the question.
Yeah. So I think you should see the household savings in the context of...
No, I just want to say that, there are several nuances of this whole thing. So please take note of the points which the DG, Deputy Governor, is going to explain.
So as I mentioned, the historical average is about 7.5% of GDP. Now, we saw in the pandemic that because people couldn't go out to spend, there were movement restrictions, and also there was stimulus into the economy, that people built up what are called precautionary savings. So they rose up to 11%. Now, as these movement restrictions were removed, people went out to spend and they started to draw down those precaution savings. That is some of the phenomena that you're seeing now. But if you see the absolute level of savings, it has gone up by 14% in 22-23. And also within the quarterly numbers, there is an increase from 4.2 in the first quarter to 7% in the last quarter. So it's already going towards the trend.
No, it's the other way.
No, it increased from 4 to 7.
Increased from 4 to 7, yeah.
The other important thing is that there has been an increase in financial liabilities of households. If you see where these liabilities are going, they are mostly going to housing. So what are households doing? They are shifting from financial saving to physical savings. When they do that, they actually add to investment. The physical part of savings goes straight into investment. So in the next year, you will see investment picking up. That's the story.
Thank you, sirs. I'll move on to Mr. Manish Suvarna from Money Control.
Thank you, Yogesh sir. Good afternoon, Governor sir. So I have a question on this. In the monetary policy report, you said the inflation forecast for FY25 is 4.5%, and inflation is seen averaging 4.3% in the last quarter of that year. So is a sub 4% quarterly forecast necessary for the MPC to lower the repo rate? Sub 4% quarterly inflation forecast necessary for the MPC to lower the repo rate?
I think you take that question.
No, the MPC has said that they are focused on aligning the inflation outcomes with the target. So a tendency of the inflation numbers to move towards 4% is what we are looking for. If it goes below 4% on a durable basis, then we will shift to accommodation. We are trying to keep inflation at the target or around it.
See, it is that is why we have used the word align the inflation to the 4% target. And again, if there is a sudden spike or if there is a sudden fall, we have to see how durable is that decline. So only when we are convinced that there is a durability in the, when what you call the inflation is at 4% or below 4% on a durable basis, that may call for a rethink, but not at the moment. Meaning?
You give us the next 4 quarter forecast,
Yes.
right? So do you need 4% figure to appear in that forecast for you to consider rate cuts? That was the question, if I understand right.
I thought that was replied, no? I mean, I cannot tell you that, what is the specific point. No, just a sec. I cannot tell you the specific point if it reaches 4.25 or 4.26, then only we will cut. It's not possible to say that. And on a durable basis, if we see inflation around 4%, that hold on. On a durable basis, if we see, people have asked this question, withdrawal of accommodation, neutral and all that. Now the question of neutrality will arise only when you see inflation at around 4% on a durable basis. Neutral would mean, you can act in both directions. And when it goes below 4%, again on a sustainable, when we are convinced that it has come below 4% and it is likely to be sustained at that level, then that could be a ground for rethink. I'm saying ground for rethink. I'm not going to say that we will cut 12 months down the road or so many months down the road, because, let us also accept that there have been multiple and overlapping shocks. And the global scenario also remains highly uncertain. Last week, whole of last week or 2 weeks, the crude prices were 90, 95. And everybody, expectation was that, but now yesterday onwards it has come down. Food price shocks, there are big surprises coming from food price shocks. There are weather events. So given that kind of a, highly uncertain environment, it will not be desirable for the central bank to say that I will do this at this particular time, because it will unnecessarily confuse the market, and it may not actually play out that way because of the uncertainties involved.
Thank you, sirs. I will take the last two questions. One is from Mr. Pankaj Ahir from Informist Media.
Thank you. Governor, sir, actually the RBI has done a very commendable job of controlling inflation without affecting growth. This is more pronounced when one looks at the global scenario, both advanced countries as well as developing countries. By when do you expect inflation will come down to a 4% target that the RBI has on a durable basis?
I think in the monetary policy report we have given our current expectations, our current projections. That is, how we see the situation playing out in the monetary policy report for next year we are giving. For this year we have given it in my statement and in the MPC's resolution. For next year it is there in the MPR. So that is how we expect it to play out. But there can be developments, there can be uncertainties in both sides. Let me put it this way, there can be uncertainties in both sides. We have seen it in the past when suddenly certain prices, especially in with regard to vegetables and all, they have suddenly crashed. Nobody had expected it at that time. So there are uncertainties, and such uncertainties can work both ways. So given that uncertainty, at the moment our position is that the path which we have given in the MPR, we expect it to play out accordingly.
You also spoke in the policy about the core inflation declining. Is there a number you have in mind to which core inflation should further go down for inflation expectation to be anchored around the target of 4%?
No, our target is headline inflation.
Sure.
Thank you, sir. With this, we'll come to the last question. I'll request Ms. Shama Mishra from Doordarshan to ask a question.
Hello, sir. So you've been highlighting sudden food shocks, these words a lot. Amidst the festive season, when a common man is ready to spend, how do you see this policy be translated for him, for a common person?
You see, first thing is that we have not increased the rates. Second thing is that our focus is to bring down inflation. So when we control inflation, when we bring down inflation, we are actually increasing the purchasing power in the hands of the people. Third point I would like to mention that when we make policy, we are very sensitive to 1.4 billion people in the country. Monetary policy is not just for some segments of the financial market. We are very, very sensitive and mindful of the requirements of 140 crore people who are in this country. A mention was made about RBI supporting growth when it was required. Even now the growth continues to be resilient. So our policy is not just for the financial markets alone. Our policy is for 1.4 billion people. And I have explained how it is likely to benefit. When inflation comes down, naturally the common man benefits the most. So that is how I would like to put it. And I think there was one question. Yeah, please.
My question is on the pricing of bank loans. On the new loans front, banks are not aggressively passing on the rate cuts that have happened so far. Much of the transmission is still on the existing pool. Whereas on the deposit side, we're seeing that the pricing is very aggressive, especially in the lower end of the basket, which is 1 to 3 year deposits. The deployment again on the lending is largely towards personal loans, all pockets of personal loans. This sort of a difference in pricing, do you expect, has your stress test so far revealed that there could be a possibility in some sort of a pricing mismatch or a problem in aligning rates possibly in the medium term? Is that a risk that you're looking at right now?
DG Swaminathan can take that question.
See, as Governor also alluded to it, the transmission has not fully played out as we see from the numbers that comes to us. And the weighted average lending rate on the existing loans or on a portfolio basis as well as new loans, and the weighted average deposit rates for new deposits are also periodically published. So we keep monitoring this. What we will have to understand is that this will be bank specific in terms of their own business appetite and their ability to attract deposit to the extent that they command a retail franchise. So it is expecting that all banks will have a similar movement in terms of either lending rates or deposit rates in a free market situation is not realistic. So what we have to understand is that basically it is market forces. As a central bank, we are only watching to what extent they are getting transmitted so that the desired effect in terms of our inflation targeting and the tightening of the liquidity framework, is it playing out, is what we will monitor. We don't want to individually prescribe in terms of what should be the lending or deposit rate. I think that's a market forces.
And it's for the bank managements to really deal with these issues. RBI would not and should not get into those areas. We highlight at the sectoral level what needs to be, what is desirable. Now, having said that, there was a point made about remittances that they are declining. I think DG Michael Patra has the numbers. You can mention that.
Yeah, I think, Lata, you're making the error of comparing Q1 to Q4. Yes. That's not the way, because there is... No. You should compare Q1 to Q1, because there is a seasonality in remittances, and there is actually an increase.
Anyway, we can continue on the bilateral mode. Thank you.
All right, so no surprises coming in from the press conference, but a very, very clear reiteration from the governor that 4% inflation is the target, not 2 to 6%. And very importantly, the governor in so many words said that if the macroeconomic conditions are favorable, it is only when consumer inflation remains around 4% on a durable basis will there be a need to look at a neutral stance, and when it comes sub 4% again on a durable basis, will there be a need for a rethink, indicating the cut. But if you look at the inflation numbers above that 4% target for the entire financial this year, and for the next financial year, the monetary policy report indicates the average will be around 4.5%. So it looks like we're looking at a protracted pause for now. Other than that, the press conference also addressed the concerns on the personal loans front. And while RBI has said it wants banks and NBFCs to put up their own internal controls, it also warned that if they fail to do so, it is at that stage that RBI perhaps could take some action. So watch out for that one as well. Other than that, of course, the reiteration on liquidity, it looks like it will remain tight for the while being. OMOs, there will be no calendar, but the tool will be used as and when warranted. RBI will remain watchful and act as needed. We have a whole host of guests joining us, to explain the policy further. Pranjal Bhaldari from HSBC, Neeraj Gambhir from Axis Bank, Anubhuti Sahai from Standard Chartered Bank, and we'll also have Shanti Kambaram joining in a bit. But we have to take a short break. We'll be back and analyze the policy with our experts. Welcome back. You're watching our special coverage of the Reserve Bank of India's monetary policy, which has held rates steady at 6.5%. Our experts are with us to help us decode the policy. Again, Pranjal Bhandari, Chief Economist of HSBC, Anubhuti Sahai of Standard Chartered, Shanti Ikambaram, Whole-Time Director at Kotak Mahindra Bank, and Neeraj Gambhir will be joining us shortly from Axis Bank. Ladies, Shanti, let me start with you. What were your key takeaways? It looks like, with the threat of OMOs, the festive season round the corner, liquidity will be tight for a while. How does life change for you? What happens to rates from here on?
So first and foremost, a pause was expected and a pause it was. I think you have to delve into the details on 3-4 key things. Inflation trajectory, growth, credit demand. If you go by each, the macro indicators on growth are pretty strong. And you heard this is across industrial, agriculture, and consumption. Urban consumption continues to be very strong, and rural is just reviving. So there is credit growth happening. Second, inflation, which is the very important benchmark for the monetary policy, is estimated to be the same for this year and trending lower next year, on the basis of food inflation, and core inflation has come down significantly. And third, of course, like I said, the liquidity in the system was a deficit, but now with the ICRR winding down and the Reserve Bank of India has committed adequate liquidity. I think from a domestic perspective, all the factors are there for India to be the new growth engine, as the governor puts it. I would only worry about 3-4 things. A, global volatility, oil prices directly is inflationary for us. Any global food shock or shortage and any geopolitical tension, which could come through currency, including flows, if the rates in the US, let's say there's another hike or 2 or so. I think the risks right now are global. In the local scenario, I think 4% targeting was very clear. So we will watch for liquidity. And while the Reserve Bank of India said they will ensure liquidity will be adequate, government spending is going to come back, etc., etc., I will watch for how liquidity flows. As a bank, our job is make sure your deposits are in sync, your lending is in sync, and that's the core business model.
Well, of course, we'll come back to the deposits question, but Pranjal, let me come to you. Specifically on the inflation numbers, it hasn't really been tinkered on the entire year basis, some small tinkering for the second and third quarter. But importantly, you earlier told us you're going to be watching out for the MPR, and there 4.5% is the average that we've got. What does this tell you about the future trajectory?
Yeah. Thank you. So, look, I think they gave us mixed signals on inflation. On the one hand, they sounded hawkish when they spoke about how we need to get to the 4% target, reiterated that. They also sounded hawkish when they came out with some revised estimates in the MPR. For example, they've mentioned somewhere that the upside risk to the current forecast could be 100 basis points if the full food production in Kharif and Rabi, crop grows awry. And they also said that the relationship between the rupee and inflation has become a little worse than before. Rupee depreciation can lead to far more inflation now than about a year or two ago. So they did bring all of this on the table. But on the other hand, they also had an extremely low, 1 year ahead inflation forecast. I thought it was surprisingly low. For March 2025, they have it at 4.3%. Last time when they had unveiled it, it was 4.4%. So they actually cut it. This is a little bit surprising to me. And honestly, I'm going to take it with huge, error bands, because there's so much that's not known. We don't know where oil is going to be. We don't know where monsoons are going to be. We don't know where the state of the economy, global economy is going to be. So I think I'm going to take it with a pinch of salt. I think it will be foolhardy at this point to extrapolate this and sort of associate it with some real rate number and say, oh, RBI is going to start cutting rates in the middle of 2024. I think that will be a little foolhardy and a bit rushed, because the truth is that if India is going to grow as well as what the whole world is expecting, in the short run, that has to be inflationary. And in India, core inflation rises very quickly when growth rises. So they have given us a very low 1 year ahead inflation number, but I'm going to take it a little bit with a pinch of salt.
Anubhuti, what about you? Do you also agree with what Pranjal is saying? The concerns that RBI has highlighted very much on food inflation, the MPR also highlights significant upside risks to this number. Is it a tad too optimistic to expect it at 5.2% by the end of the year, 4.5% for next year?
Sure, thanks for that question. I think, first of all, when we are looking at the December end and the March end forecast which RBI or the MPC has provided, probably at this point in time, given the available information, I do agree with the MPC's projections that there was very little need to tinkle around with those numbers just at this point in time. Right now, the upside risk to those numbers would primarily emanate from food prices in case there are any future weather disruptions. So I think we have to be a little bit more patient to understand how the harvesting plays out on Kharif and how the Rabi sowing plays out. So I think for the near term, that is for December and March 24 numbers, it was pretty justified to keep those numbers unchanged. For FY25, I think when we are talking about the MPR numbers, these are model-based projections. When we come closer to the monetary policy decisions, which would be the case in, say, June or September of 24, these numbers change dramatically. Even if you look at the baseline forecast, I think for H2 FY24, RBI still has a very like a conservative estimate on oil, which is at 85, and those numbers can change a lot when we move into next year. So our sense is near term, completely agree with those numbers and the forecast which MPC has provided. FY25, completely agree with Pranjal there that these are model-based projections, extrapolations, assuming business remains as usual, which never does. So we'll have to watch out when we are closer or we are into FY25 to assess the inflation risks then.
Okay, thanks a lot for that, Anubhuti. Neeraj, look at the way the yields have gone up. Now what is your range? I mean 10-year.
Slightly hard to tell you the range at this point in time because the market is still digesting this new piece of information about the use of OMO for managing liquidity. I think we'll have to wait and see what kind of OMO auctions are announced, what's the size, what securities are being used, etc. I think for now, the market will look at what happens in today's auction. We have auction today, and after today's news, we'll have to see whether this auction goes through smoothly or whether there's a devolvement. That could add to a bit of a pain of the market, but my guess is that we'll probably settle somewhere close to 735 to 740 levels in the near term, in a very near term. And from there onwards, it will depend upon how the liquidity situation plays out, what Reserve Bank does on the OMO front, and what happens to the global yields, particularly the yields in US. I think we were kind of protected from the US, sort of sell-off that happened. Part of the reason was that there was this anticipation of bond flows that will happen as a result of portfolio inclusion. Now, this change in the policy stance of managing liquidity through OMO has kind of appended a bit of that estimation. So, market will take a bit of a time to settle down, my sense is, Lata.
Okay, but Shanti, in the meanwhile, I mean, this clearly is not going back to, what do you call status quo ante. It's not going to 7.14, I would assume. So do you think banks are going to be faced with higher deposit costs and they will be passing it on in the form of higher lending rates?
So Lata, two things are important. Credit growth, which continues to be strong if you look at the data that is coming out. Different banks have different data. And so far, the way banks have gone about their deposit accretion, you haven't seen any change in rates. If you look at the mainline banks, for the last 5 to 6 months, they have been very steady. So I think we will be watching demand, and the festive season is upon us, so expect demand to be strong. But each bank has to carve out a strategy. I mean, for Kotak, I can talk. We have a three-pronged strategy: CASA, active money, as well as term deposits, which is right now feeding our growth. So should there be a contraction in liquidity and should there be a demand sudden surge, then you could see rates go up, which I guess will also translate into lending rates other than those linked to repo perhaps. So we're going to watch the situation. I think right now banks, if you look at all what you're seeing and hearing, have their strategies in place for the deposits. But I expect volatility, and thus RBI to manage the liquidity. So there could be some spikes. So we'll have to wait and see.
Neeraj, CPs also would have gone up, no? I mean, I don't know. I can't see the CP yields. I only have the CCIL website with me. But it would be across the board. So corporates are going to pay more. Borrowers are going to pay more, right?
The impact of today's action is much more on the longer end bonds, Lata, rather than in the shorter end of the curve. Shorter end of the curve typically reacts much more to things like CRR changes, etc. That hasn't happened. Thankfully, ICRR is being sunset. So at this point in time, the reaction is much more on the dated government bonds and the longer end of the curve and the OIS and a little bit of the corporate bonds side as well. But it will take a few days for things to settle down before market fully understands the import of this change in the stance on liquidity management.
Okay, okay. Pranjal, would you look at this? See, the cost of money globally has already gone up. And the cost of money, at least as far as market rates are concerned, has gone up over the last 2 hours. I agree. It's a very short period. But you don't see any long shadows on growth? 6.5 it is for you also?
Well, my numbers are a little lower. They are closer to 6%. But, you know, there are big error bands and a very volatile time. I would say growth in India is extremely strong. We spoke about this yesterday too. Rural India might be a little weak, but urban is extremely strong. You look at labor market data, the number of people employed today is far more than in the pre-pandemic period. Both the formal and the informal sector are doing well in the urban, in urban India. A lot more people are getting access to credit that they were not getting in the past. So even if, you know, cost is a little higher, a couple of basis points higher, I don't think at this point this is going to really blunt the story, the strong growth story that, you know, we've seen. And honestly, this is not just in India; it's also in the US, right? People are expecting month after month that now growth is going to slow, but it is not happening. I think some countries have some differentiated structural elements which are keeping growth quite buoyant.
Neeraj, what's your sense about NBFCs, because they depend on market to borrow? So while the cost may not go up for banks immediately, you think it will go up for NBFCs, right?
Yeah, so I think corporate bonds yields will likely move in lockstep with the government bond yields. If we see about 15 basis point movers happen in the bond yields in the government side, so a similar yield could play out in the corporate bond side as well. What we typically see is when the yields go up like this, the issuance activity comes down a little bit. I think the issuers tend to wait and watch and let things settle down before they come back into the market. So till such time that happens, a very clear fix on where the corporate bond yields are settling may not be easy to get. But I do expect a commensurate increase in the corporate bond yields as well.
Okay, fair point. Just a final couple of questions to the economists. Anubhuti, your growth and inflation target for next year?
So for inflation, we are higher than what the model-based projections are there in the monetary policy review. So we are at 5%. Our sense is going to the handle of 4% on a sustainable basis will be difficult given the global commodity prices, our view that oil is likely to remain above $90. And of course, we live in times of climate change. On growth, we are looking at a 6% growth number even in fiscal year 25. We have to take note of the statistical buoyancy which even the next June will have, and that on its own will pull up the average growth number a lot. But overall, based on the strong India fundamentals, our view that real wages both in rural and urban areas are likely to improve. They are already improving and are likely to remain a trend even in FY25. Our sense is that growth is likely to hover around 6% both this year as well as next year.
Okay, give me a monosyllabic answer. First rate cut, when?
June 24.
Pranjal, your estimate of the cut?
Very shallow rate cut of about 25 basis points around the same time, June 24. But one more thing here, if they want to ease, they can also ease via the liquidity, right? Right now, call money rate is at 6.75. At some point, it can come down to 6.52.
Yeah. Okay, Neeraj, yours?
I think it's too early to call for a rate cut. Going by the inflation forecast, I think we're still going to be in a very status quo kind of a policy for some time.
And Shanti?
I think it will be paused for some more time. I don't think, I can estimate that it'll be June. But RBI will manage it through liquidity measures rather than a rate cut. Because even if you look at the projections for next year for first quarter and second quarter, the inflation trajectory is still in its 5. It's only towards the last quarter that they've really dropped their inflation projection. So I think if the global interest rates, Lata, continues to be strong and pause for long, I don't see RBI dropping the rates. They will manage inflation through other tools they have. Unless, let's say oil goes to 120, there's a massive increase, then I expect the reverse.
Okay. Oh, of course, then all bets are off, of course. Neeraj, Shanti, Pranjal and Anubhuti, thank you very much indeed for joining us. Thank you, Ritu Singh, as well, for parsing the monetary policy. I think the key takeaways are quite positive for stock markets. I mean, pre-policy, post-policy, it's a 25 basis increase that you're seeing in the indexes. So clearly, the fact that interest rates have not been hiked, the boat hasn't been rocked, has been taken well, and growth numbers are strong for next year as well. 6.5 is the central bank's forecast, and everyone agrees growth is strong. For the bond markets, bad, disastrous day. About 20 basis point rise in yield. So bond dealers who are long are sitting on losses. And I think it's negative even for NBFCs because they borrow from the bond market. So immediately it's negative, but of course yields will find their own levels in course of time. Otherwise it's status quo. But yes, cost of money has clearly gone up. However well or however differently you want to put it, RBI has tightened and increased the cost of capital. No taking away from that. That's it on the special coverage of the Reserve Bank's monetary policy, coming to you from Mint Street. After a break, other news and details will follow.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar. Let's take a quick look at the market. And yes, there is impact of the RBI's monetary policy about which we have extensively discussed, and take a look at Nifty 50 closer to the high point of the trading session at 19,650 odd levels. When we look at the overall market as well, 0.5% gain on Sensex along with Nifty, and 350 points gain when we talk about Sensex. So markets looking good at lunch hour. It looks fueled up. Bank Nifty, that's the pocket which gets impacted by the RBI's policy and the commentary coming in from the Reserve Bank of India chairman, and 0.3% up in trade. It did see a bump up when the policy decision was taken, but soon there was a little bit of profit booking there. So at the moment, 0.3% up there, and mid-cap universe resilient, 0.5% up in trade. On my screen, also advance decline ratio in favor of the advances. Market strength is also there, and Bajaj Twins are some of the best performers on Nifty 50, along with IndusInd Bank. Titan continues to shine in trade, HDFC Life, Tata Consumers, and from the steel pack, JSW Steel looking good. All right, let's get you some of data coming in on an important development which is of national importance. And let's begin Business Lunch by focusing on the flash floods in Sikkim. At least 21 have been killed and more than 100 are still missing after a flash flood hit Sikkim on Wednesday. In fact, at least 20,000 people and over 3,000 tourists are said to be stranded in different parts of the state. Search and rescue operations are being carried out by the Indian Army and 3 Shakti Corps. All government and private schools and colleges will remain shut till 15th of October. The IMD has predicted that heavy rainfall in the state for the next 24 hours is likely to continue. Additionally, the Indian Army has also alerted that weapons and explosives were washed away in the Teesta River and has urged people to be vigilant and also report any unfamiliar objects, crates, packages, firearms, or any suspicious items. So we are reaching out to you here with this announcement coming in from the Indian Army that do report any suspicious, aspects, objects being really spotted. All right, the hardships of the COVID-19 pandemic may be behind them, but Mumbai's iconic dabbawalas are still fighting for survival. In fact, clientele is down 80% for them, and Mumbai now has 72% less dabbawalas on the road than there were before the pandemic really hit us. But CNBC-TV18 Santia Gora reports the dabbawalas are working on staying relevant, going so far as adapting to the digital era and also taking food delivery platforms head on. Take a look.
A white cap, a white uniform, and cycles laden with tiffin carriers. These have been 34-year-old Tukaram Bendure's identity for the last 17 years, of which he has spent as one of Mumbai's Dabbawala army, delivering food from homes to offices like clockwork.
ये काम में जम गया, मतलब सबको फ्रीडम है. ऐसा नहीं कोई मुकदम है, कोई वर्कर है, ऐसे नहीं, सबको सेम ही, मतलब इक्वलिटी है इसमें सबको. संडे को छुट्टी भी है, फैमिली को टाइम भी देने के मतलब वक्त मिलता है.
The COVID-19 pandemic took a big bite out of his livelihood. He, like many of the 5,000 odd dabbawalas who kept India's financial capital fed, had to resort to taking odd jobs. 3 years later, only 1,300 to 1,400 of these dabbawalas came back, including Tukaram. Many didn't get the warm welcome they were hoping for.
1.5-2 साल कम से कम बंद था, 1.5-2 साल. उसके बाद आहिस्ते आहिस्ते कोई एक जन आ गया, तो फिर कोई एक कस्टमर मिल गया, 2 कस्टमर मिल गए, मतलब वापस चालू हो गए. और पुराने कस्टमर पूरे नहीं मिल गए, मतलब पूरे नहीं आए. लॉकडाउन के पहले 18-19 हज़ार को इनकम थी बराबर. अभी 14-15 तक हमको महीने का मिल जाता है.
Their clientele has also dropped by a whopping 80%. So the pre-pandemic subscriber base of 2 lakh has shrunk to 40,000. But the future, many of the dabbawalas say, looks tough.
पहला सीजन नहीं रहेगा, पहला चल रहा था अच्छा, लेकिन अभी क्या है, बच्चे लोगों का भी पढ़ाई करने के लिए दिक्कत हो रहा है.
अभी तो 1-2 महीना बोल के 2-3 साल तो ऐसे ही गए.
अभी हम लोग फिर गांव में खेती करने लगे, जो भी काम मिला वो करने लगे। उसके बाद इधर आने के बाद जो पहले मिलता था वो फिर नहीं।
हमारा 6 महीना तक कमाई नहीं था, हम घर में ही बैठता था और गांव गया था और गांव में खेती भी देख रहा था। फिर आया तभी एक एक टिफिन करके चालू किया।
But these dabbawalas are not giving up. One big challenge, they say, is surviving in an era of food delivery apps. And so they are developing their own app. They have also started a centralized kitchen which will expand their role from just last mile delivery to cooking and delivering homemade meals.
जो हम लोग डिलीवरी चार्ज देते उसके लिए कस्टमर जो हमारा सिक्योरिटी से लेके जो एमडी तक का जो टिफिन है उसके लिए वो कस्टमर भी सेटिस्फाई होता है। हम लोगों तो श्योर गारंटी है कि मुंबई वाला डब्बा वाले के लिए सपोर्ट करेगा।
Muke believes these steps will breathe fresh life into the vision of Mahadu Bacche, Mumbai's first dabbawala, who offered to pick up and deliver lunch to a Parsi banker from her home way back in 1890. Mumbai dabbawalas are hell-bent on keeping the old-school dabba delivery style alive. For them, it's more than earning a livelihood. It's a matter of keeping tradition and history alive. Though they are evolving with the times, they are keen on ensuring that Mumbai will continue to witness the iconic dabbawalas in their white caps delivering fresh homemade food like clockwork for many more years to come. In Mumbai, with camera person Swapnil Bandekar, this is Santhya for CNBC-TV18.
Remember that the business model of these dabbawalas has been studied by the Ivy League colleges as well. So relevance in times of adversity, that needs to be seen next. With that, it's a wrap on Business Lunch. Thanks so much for tuning in.
Good afternoon. Welcome to Midcap Radar. This is the Friday edition. I'm Reema Tendulkar. With me is Ekta Batra, and these are the top stories. An RBI status quo on rates and a reiteration of India's economic resilience support stocks. Consumer discretionary realty leads gains, while energy, capital goods lag.
RBI and MPC keep the repo rate unchanged at 6.5%, retains its stance at withdrawal of accommodation as it does its GDP and inflation estimates, but RBI has indicated it will sell bonds via OMOs or open market operations to keep liquidity tight. Bond yields shoot up.
RBI points out that a segment of personal loans is seeing very high growth, and it is closely watching the space for stress. This even as it allows smaller NBFCs to use credit risk mitigation instruments and allows urban cooperative banks to enhance ticket sizes of bullet gold loans.
Indigo Airlines introduces a distance-based fuel charge to offset the sharp rise in aviation fuel prices. Sources tell CNBC-TV18 that other airlines may follow suit. The stock scales higher.
Bajaj Finance and parent Bajaj Finserv perk up after the company unveils plans to raise near 10,000 crores in equity. The move is expected to aid acceleration in growth amid intensifying competition.
A very good afternoon. You're watching Midcap Radar on CNBC-TV18. Well, it's turning out to be a session which is quite stable at this point in time. So we have the Midcap Index, which is up around 0.5%. We have the Nifty, which is up around a cool 100-odd points. And the Bank Nifty, which is up around 150-odd points. So overall, no real big surprises which came in from the Reserve Bank of India policy. And it seems as though the stocks are taking it in their stride. So Bajaj Finserv, Bajaj Finance, both of these stocks are your top gainers on the Nifty this afternoon, up around 3% and 5% respectively. We have Titan, which is up around 2%, and even something like an IndusInd Bank, which is doing well. But let's focus on the broader markets because there's a lot buzzing around. We have a good advance decline ratio on our hands as well. So let's get across to Vivek in our mid-cap movers segment, where he's going to take us through all the broader market stocks which are moving this afternoon. Vivek.
Well, thank you so much for that. Like you mentioned, most of the stocks have been quite resilient, and the advance decline ratio, especially in the broader end of the markets, continues to remain quite steady and quite strong. Quite a few stocks on our radar. First on our list, PNB Gills. The company has said that it's going to enter a new line of business. The stock is up 16%. Quick Heal Technologies, after a while, this particular stock up over 9.5%. Inox Wind, the wind sector continues to remain abuzz on the back of strong ordering activity, and the stock up over 6.5%. And Ujjivan Small Finance Bank, steady set of quarterly updates, and also the market chatter regarding both Ujjivan Small Finance and Ujjivan Finance, the Holdco company discount that currently is trading, that too is keeping both of these stocks quite buoyant. Some of the other stocks, especially stocks that have listed recently, there has been a sharp up move in some of these names. Look at Zaggle Prepaid. This particular stock is up 37% from the day it has listed itself. Yatharth Hospital and other stock up 7.5%, and Rishabh Instruments today up over 8%. Some of the stocks that are seeing very strong volume action compared to the typical 5-day, 10-day volume action. Dilip Bilkon, after a long time, this particular stock is up on good volumes. Pricol up over 3.5% in the session today. And this particular stock, PCBL, Philip Carbon Black, there's been a price volume breakout today, and a lot of HNIs have accumulated this particular stock as well. So that's another stock to keep on the radar. On the other hand, some of the stocks that are seeing quite a bit of selling pressure. Chennai Pradno down over 4.5%. Jindal saw this particular stock down over 2%. And Neogen Chem, the company announced a preferential issue. It was slightly below the current market price, and there has been a bit of profit booking in this particular name as well.
Thank you for that. Let's get to Hemen Kapare of KR Choksi Securities. He's with us on the show. Hemen, 2 good days on the trot. Do you see a lot of upside in the markets beyond these levels?
A very good afternoon to you, Reema. Thank you for having me. A couple of points. The dollar index seems to be just cooling off from its high. Crude has cooled off. The US VIX has also cooled a bit. Our VIX has come below 11 against, again, Reema. Nifty didn't go to 19,250, which was an important support. And 43,600 was a support for the Bank Nifty, which held. So frankly speaking, all the points, at least in the near term, seem to be interestingly positively poised, and 2 important stocks which I believe were responsible for the market going down. They've held on to support levels. One is HDFC Bank and one is Reliance. Sentiment-wise, weightage-wise, both mean a lot. And they've held. So I have a feeling they look like holding. If they do, I think about 19,750, we can expect an upside. So things are looking, I wouldn't say hunky-dory, but we're getting out of the woods as of now.
Okay, stock specific, Hemant?
Okay, a couple of stocks which look interesting. Firstly, there's a buy call on Reliance, remains a personal favorite actually. Stock is oversold. We've taken support at a very important support level after multiple weeks of a decline. Downside appears limited, positive divergence on the intraday charts, positive divergence on the daily charts, in the indicators slowly giving crossover buys. So one can buy Reliance at 2315, stop loss 2290, target is 2365. It's a modest target, which I believe should get comfortably overshot. The second stock is a buy on Apollo Tires. We formed a small 10 trading session base. We are breaking out from there today. Once again, positive divergence, oversold, oscillators giving a crossover buy, looking good. We are recovering after a multi-week decline in Apollo Tires also. One can buy it at 380, stop loss 368, target 404.
Thank you for that. We'll slip into a very short break on that note. On the other side will be our special segment, Mid-Cap Spotlight. We'll focus on Interglobe Aviation as the stock gains in trade on the back of some news and developments. Stay tuned.
Welcome back. You're still tuned in to Midcap Radar on CNBC TV18. Well, it's turning out to be a session where we're seeing a steady amount of gains which have really come in for the banks. Just want to point out, however, a couple of stocks which are buzzing around on the upside. So something like a Godrej Industries is doing well in today's trading session. That stock is up around 8% odd. We have Kalyan Jewelers, which has jumped up around 10% odd. So that particular stock is doing well. And even Inox Wind is showing some good amount of traction on the upside. So do watch out for Inox Wind, which is up around 14 odd rupees on an absolute basis. And a couple of other stocks such as Dilip Bilcon, which is up around 7% odd. So a lot buzzing around within the broader markets. But in our segment, Mid-Cap Spotlight, Sonia is here with us. She'll be focusing on Interglobe Aviation, which operates Indigo Airlines. This is after the company brought in a new fuel charge on fares. Sonia, tell us more.
So, this fuel charge has been reintroduced by Interglobe Aviation. If you remember a couple of years ago as well, after the ATF prices surged, Interglobe Aviation had come out with a fuel surcharge. Now, this time around, the same thing has played out. Because of the surge in ATF prices, Interglobe has said that now, based on the distance that you travel, there will be an additional fuel surcharge you'll have to pay. The maximum fuel surcharge will be up to 1,000 rupees. This will be effective from today, that is from October 6th. And it will be across routes, in the domestic market, domestic and in the international routes as well. Now, this is important for Interglobe Aviation because if you look at the way ATF prices have gone up, just in the month of October, ATF prices were hiked by 5%, and this is the fourth consecutive month of a hike that you've seen in ATF prices. So they need to pass on this, fuel costs to the consumer in order to maintain their profitability. The other positive, of course, is the fact that crude oil prices have cooled off, which will be a big positive for them in the quarters to come. And then you have travel that has picked up in a big way because of events like the World Cup, etc. So all of these triggers put together has brought, got the stock quite active this afternoon. Back to you.
Oh, thank you very much for that. Let's also focus on one of the key policy announcements, which was made by the RBI governor. The central bank has doubled gold loan limit under the bullet repayment scheme. To understand what this exactly means, what the implications are, Abhishek joins in. Abhishek.
Well, as you mentioned, RBI has mentioned on bullet repayment scheme for urban cooperative banks. So urban cooperative banks have been permitted to extended glide path for achieving the PSL targets beyond March 2023. So RBI has now decided to increase the gold loans that can be granted under the bullet repayment scheme from rupees 2 lakh to about rupees 4 lakh. So that increases the ticket size under which, these loans can be given. This is for urban cooperative banks who have met the overall PSL, that is priority sector lending target and sub-target on as of FY23 or March 2023. Just to alert our viewers, this may take away market share from the existing NBFC gold financiers like Manappuram Muthoot as well. Average ticket size for Manappuram is about 85,847 rupees per loan or per customer, and for Muthoot Finance it's about 1.22 lakh. Now this average may be on the lower side, but under the bullet repayment scheme what they have, the ticket size for gold financiers will also be slightly higher than their average. Back to you.
Okay, all right, Abhishek, thanks very much for that. So those are a couple of RBI policy highlights. We need to take a short break, but stay tuned. More on the markets, more stocks on the other side.
Welcome back. Sources tell CNBC-TV18 the JSW Group and MG Motor India may announce a deal as early as Diwali. Remember, JSW Group has already signed an MOU for this deal. Parikshit joins in with more details. Parikshit.
Well, yes, this development had been under discussion for some time, and we believe that MG Motor, the senior management of MG Motor India and SAIC, they have met Sajjan Jindal, and a deal has been finalized. An MOU, we believe, has been signed already, and very soon, that is by Diwali, we could see an announcement by JSW for taking a stake in MG Motor India. So initially, we are learning it will be a 35% stake that JSW will pick up in MG Motor, and this may happen in a staggered manner. For the moment, MG Motor India will continue to hold 51% stake in this entity. But after their IPO is done, then this will become a majority Indian-owned company. There would also be a 10 to 14% stake, which would be owned by dealers of the company, by certain PE investors, and those conversations are going on side by side. Both companies have refused to elaborate on this, but of course MG Motor had made its plans very clear to reduce its stake in the India market, become a majority-owned Indian company, and sell a big share to a large Indian manufacturer. So JSW seems to be that manufacturer they have zeroed in on. We're also learning that Sajjan Jindal is very keen to disrupt the market with electric vehicles and with a great push towards localization as well. So let's see how fast this deal happens, but we believe that anytime in the next 30 days, we could see a final announcement.
Okay, all right, Parikshit. Thanks very much for joining in and giving us that story. But let's move to another exclusive. CNBC-TV18 has learned that MCX may have got a SEBI panel approval to shift to the new tech platform. Our colleague Sudarshan has the details. He's been tracking this story. He joins in with the latest.
Yes, that's right. So what we understand from sources that SEBI's Technical Advisory Committee has likely to have approved MCX proposal to shift to new platform that is being serviced by TCS. And that decision was taken in the last meeting that SEBI's Technical Advisory Committee had. Now, let's talk about what's the issue and what exactly has happened over the last 2 weeks. So the new platform that is being serviced by TCS to MCX, and for which MCX had signed agreement in 2021. And the current platform that MCX uses is serviced by 63 Moons. Now, for which they have an agreement till December end. For smooth transition, MCX wanted to move to that platform 3 months in advance of that expiry, which is happening in December, so that it can have both the platforms of TCS and 63 Moons for 3 months. So in case if like any platform faces technical glitches, they can shift to another platform. And for that, MCX on August 28 had announced that it will shift to the new platform from, September 29. They had announced that they will shift to new platform from October 3. But within a day of that announcement, SEBI came with an announcement saying that you have to put that proposal in abeyance as Chennai Financial and Markets Authority, which is based out of Chennai, moved Madras High Court raising concerns related to technical issue with the new platforms. And that case is likely to be heard on 29th of November. But meantime, in the last meeting that SEBI's Technical Advisory Committee had, they have decided to give the shifting to new platform a go-ahead.
Thank you very much for that. That's the latest on the MCX issue with their tech platform. We'll get into a break on Midcap Radar. Your stocks on the other side. Stay tuned.